16th. Welcome to Taking Stock. It's 12 o'clock. It's the 16th of January, 2024. Johnny Boy's here. You're right, John.
Not too bad. How you doing?
Not too bad. John just had a heck of a boast then. He said, I got a massive watch list.
Well, I did. I spent yesterday flicking through 1,500 FTSE listed companies. Mainly looking at the charts, actually. Mainly looking at the charts.
Yeah.
To see whether I like the look of anything and think companies that I know I like and I've looked at before. So I just sort of put them all on a big list.
Yeah.
Looking, just to be ready, just to start doing a bit of a cull of that list.
Yeah, that's it. I've always said, the trouble with investing is option paralysis. There's too many companies to research. Like I said, if you look around about 2,000 companies listed pretty much, like even if you one a day, 365 days a year, it'll take you a couple of years to get through them all. So what you need to do is get a screener, first of all, and think what kind of companies I want to avoid and start weeding them out. Say I want good companies of this or good margins, growth, whatever.
Yeah.
And then just like watch them for a while. And in a bear market like this, you can still take your time when they release news. Like for example, a good example actually. I've got a little bit defensive, but like I said, yesterday, good companies release news, good news, and if they travel a little bit, it'll come off. So it's always worth waiting. And in fact, yesterday, Ramsdens, I think, very interesting sector because I know you own H&T. So looking at that sector, because I think it's a bit of a contrarian play. The economy is not going to get any easier, even if there's the warning about interest rates coming down. The markets rate may rally a little bit, but real business fundamentally, I think, is still going to struggle because it'll take a while for interest rates to come down. You've got the cost of living crisis going on. People tightening their belts, companies with debt as well. So I think those kind of areas where like H&T pawn shops and price of gold is going up, so that'll benefit them, all that kind of stuff. They're going to do quite well, I think, in a bit of a downturn, those kind of companies. So I'm just looking at over the next 12 months and maybe beyond that then, go for more cyclical stocks and taking a bit of a hammering. But it's about sort of positioning a portfolio and looking at things, what will benefit when. And just taking time because we can take time. It's not in a bull market. Previously, in bull markets, things tend to rally like crazy. Microcap stocks offer a bit of good news. They continue. In bear markets, they don't. They come back. They always come back, so you can take your time, can't you? So how big is your watch? Is your watch list bigger than my watch list, John?
I have no idea.
A massive one, you said.
I have no idea what's on your watch list.
Ooh,
I've just added another company on it to it called Begbies Traynor on that. But strangely, even though we are expecting an uptick in insolvencies and businesses in distress, it's not been doing too well.
I've always found that. I'm sure I've owned Begbies before, thinking in the last downturn it's going to really take off. It never sort of did. I know. Why is it? Anyway, it's one of your favourites, John. Biggest riser today, FTSE 100. It's Ocado.
Well, they had some decent numbers.
Yeah.
They had a decent Christmas, and I think they've been helped along. Their retail business is essentially a partnership with Marks and Spencer.
I don't even know how it works really. So I know haven't they got quite a sort of futuristic sort of fulfillment center that's all robots and stuff.
That's right. But they span their retail side of things. So they did used to work with Waitrose, if you remember. And then they finished that arrangement and now they mainly because Waitrose actually took their online delivery in house. But they now work with Marks and Spencer, and we'd already had a good trading update from Marks and Spencer. We knew that they had a good Christmas, and obviously that's reflected in this statement as well. But I guess the interesting thing in this statement more than anything is that they've actually swung back to EBITDA profitability.
Yes, that was just going to highlight there. It's the focus on costs because they are a £5.6 billion company. They've rallied a lot on hype, it's one of the biggest hype potential stocks I can think of. But like I said, the fact they said the focus on costs has translated through to our bottom line, returning to positive EBITDA for the full year. So that would be good. So I assume, because it wasn't a huge. I mean, they're okay, the numbers, not a huge upticks. Average basket size, look at that. That's gone down a bit. That's interesting, isn't it? When you're looking at people tightening their belts.
Well, you look at volumes across the year are down, but obviously pricing has helped the top line. I still don't like the company.
No. It does move around a bit. FTSE 100 down 0.4%. FTSE 250 less so 0.14. AIM all share again. Couple of days. It's been it's contrarian playing. I do feel like almost like the big sell-off has happened in AIM, and it's fallen more than any other indices, of course. So maybe it's done the hard yards. It's felt the pain maybe. But Burberry rebounding a bit. They're experiencing up. Pearson, Rio Tinto. What's the fallers today? Oh,
Rio had a
Rightmove been
little right.
downgraded, haven't they?
Who's
Rightmove
been
by
it?
JPM.
Is that right?
JP
Is that
Morgan.
what's happened? Yeah.
Yeah, it was on Vox. I read that. I just read it on Vox just now. So they've been downgraded by JP. They're saying
See,
that.
I always find it fascinating how much those big broker downgrades actually can move
Yeah.
share prices. It's quite
Well,
astounding.
exactly. And it's right here if you want to read it on Vox. And they do say that essentially they do mention that CoStar buying on the market and that they'll ramp up their investment on the market and make it more of a challenge for market share. And they do say they don't think they'll be likely to grow 7% EBITDA growth from to make it increasingly hard to justify the valuation of 16.2 times estimated 2024 EV EBITDA. They are the market leader though, but they're man. They're rating their operating margin will go below 70%.
It's
Operating
not a bad
margin below
operating margin, really.
70%. I
I
know.
mean, it's that's one way to look at it. If a company does have very very high margins,
Yeah.
that on the one hand can be
Yeah.
seen as a positive. It's obviously this is a very efficient business,
Yeah.
very profitable business model. But when you get companies with very high margins like that, then there is the temptation for other companies to go, I want a bit of that margin.
Yeah,
So
exactly. There's
actually,
plenty of they've got.
well,
It shows you that they're a market leader, doesn't it? There's other
it also
the
shows
first
you
ones
that
are, yeah,
there's major profits to be had in that industry, and
yes,
hence
yeah. People jump
competitors
into
might
it.
come into that market.
Yeah,
Now there was a concern many years ago that Google would try and come into to the sort of the estate agency platform market, and it tried and it failed. So I guess the thinking was for a long time that if Google can't do it, no one can.
yeah,
But
yeah,
that's not true. And if you put some capital behind on the market, if you put some capital behind Zoopla, which is a great platform as well, it does certain things that Rightmove can't as a buyer. So I understand why there's concern about competition and why that margin might be an attraction to competition in this industry.
yeah. It's interesting to see why Google can't really do that, isn't it? Maybe it's a bit more complex, just the market. But do you think it's more an aggregator? You think you'd be able to do that? I suppose they can't.
It's
But
specialism, isn't it? It's specialism.
yeah,
So, Google was trying to come at it with this sort of like one size fits all thing, and
yeah, generalized
actually Rightmove
approach.
knew its market, the UK, very very well indeed. So was able to fend them off. But that's not necessarily the case with the other competition that's out there.
Yeah, it's well, listen, the chart of on the market not looking the best. It's slowly
Oh, Rightmove
grinding lower a
on the
little bit.
market's been taken out. That chart looks great.
Yeah, yeah. Okay, everyone, sorry, forgive my housekeeping, omissions here, but thanks for joining us live. By all means, comment. Have you seen anything today, news-wise, we can have a look at? Hit that thumbs up button if you like the kind of content we're providing, and don't forget, download the Vox Markets app if you haven't already. voxmarkets.co.uk/app, and subscribe to the channel. Hit the subscribe button right now if you haven't. Okay, no, not. So Hannah just said, did I mishear? Is Rio downgraded? No, not Rio. Rio wasn't.
No,
Rightmove.
Rio had a
Both of them
trading
are.
update. Rio had a
Yeah,
trading update today.
yeah. Afternoon, chap, says Greg. Afternoon, Greg. Matthew, Card Factory selling off on great news. Thank you, Mr. Market. 3 buys already and 2 more limit orders set. Yeah, I did see this look at Card Factory because it did seem to me. I was surprised. I suppose I've said this before and people won't agree with me, but I the big run has happened in Card Factory, I believe, and so anything that comes out now, unless they really blow it out of the market with unusual figures, they've had a good massive rise. You're always going to get people taking a bit of profit here.
Profit
But I did see
taking,
the figures.
100%.
Yeah, the figures are good though. I mean,
Oh yeah.
look at that. Look at its total sales, for the year up 10.2%, and even Christmas trading was good. Outlook, they said they're above top end of expectations.
That's the top end of expectations.
Yeah.
I guess what some investors may have been hoping for was that they would be above expectations.
Okay. Yeah.
But that's not the case.
But
that's the risk when something has had a strong run.
yeah.
The expectation is that you want earnings upgrades, and they're not here today.
Yeah. Yeah, yeah. I mean, if you look at this, just where it's come from since, in fact, this time sort of last year, so October, it has done 150%, and for a
Mm.
mid cap stock that was out of favor, it's quite good, and so it's gonna be hard now to break that top line, almost resistance at 115, 1 pence. So yeah, but you often get these liquidity events. Like I said, people can take a bit of profit when they know there's liquidity in the stock because they've released a trading update. You can get this and you can resume. But I wouldn't be surprised if it goes in the trading range for a while now, and just consolidates for a bit before it takes a leg up higher. But those trading ranges can last for a long time. I say it's not too bad if you're being paid a dividend. Do they pay? I don't think they do. Do they? Do they pay a dividend or not?
Do they pay a
I sh
dividend? They pay their forecast yield is one and a bit percent, 1.3
okay,
percent.
so
So,
yeah,
but
yeah,
they're actually prioritising paying off debt. If you look at their balance sheet, their net debt position has fallen from 288 million in 2020 to 161 million today. So a lot of their free cash
yeah,
is going into to improving the strength of the balance sheet, which I think is very, very sensible. And shareholders being rewarded with a small dividend and capital growth. But that will there will be dividends, high rate dividends in the future. You would expect
yeah.
as the balance sheet as the net debt comes down.
Okay, let's have
Good
a quick
company.
look at the front page of Vox here. Blue Side Capital saw some positive update there. I think they were one of the risers today. They were,
Yeah,
yeah,
big
up
riser.
27%. Yeah, so only obviously a 6 million market cap, but they talk about Dynasty and the partnerships there and Satoshi Pay going forward.
Yeah.
So yeah, good news there. Equals again come out with some decent figures, but it's dropped a little bit. I don't know why this is. What the thought was. Paul's done a piece on this, but yeah. So if you look at the figures here on it, sometimes I find it. Oh,
Profit taking. I mean, look at the run. Look at the run since the beginning of,
yeah,
well, since
yeah,
the pandemic. It's
yeah,
actually, funny enough, it's back to where it was before the pandemic.
yeah.
Just come off a little bit. But that's obviously you have to go back a long way to look. Go back and back.
Oh, I know. Yeah, yeah.
Um,
Well, do you know
there
what?
you go.
I used to
it's back
interview
where it
Ian
was.
Travis. Yeah, when it was called. What was it called? I can't think. It was called beforehand. Fairfax. I used to interview him, and I remember taking off. I thought I quite like these, but it's one of the stocks where sometimes like it's too big a watch list, and you just forget about it, and then all of a sudden
Mm,
you do. And I didn't get in, and I think Paul then got in. But yeah, like I said, it's had a cracking run. It's coming back into this range here, but what are they saying? Is it 36.4% change on the same period last year, 95 million. Um, yeah, so yeah,
mm.
it's all looking good, but they obviously want to be they sort of I mean chats and they about being taken over maybe. So what
Yeah.
else was going on there?
There's another
Go on.
payments company had an update. Camp Payments.
Oh yeah, yeah,
Which is,
I put those on the list
again,
as well.
again, a very, very strong statement, but the shares off a little bit.
Yeah, but do you know what? I looked into CAD. They've had a massive fall off, right? The profits
Mm,
warning a while back. We talked about this actually when the thing. And what I didn't like, well, I do like the growth here. It's like it is a payments company. Like I think they're in developing countries, aren't they? And like I said, they're only
yeah.
listed back in July 2023. So I went back and I just one of the over there. I didn't understand it. Let me go back to the results here. Look at this. Results 6 months. Okay, so 6 months. Now top line all looks good. Total income up by 94%, 71 million, EBITDA 39.9 million. So then I went down to the cash flow statement, right? I thought, what? I don't understand this. Because I'll just scroll down. One, yeah. So net decrease in cash and equivalents, 40 million. Net cash used in operations, 31 million. I thought, hang on a sec. I don't like that. So I couldn't marry the two together. The cash outflow and literally and the EBITDA positivity apparently. And what's going on here? I don't understand that. So whenever I see that, I just stand back. If you don't understand something, because it should be
Mm,
similar. I mean, it's not going to be exactly the same, the cash flow and the income statement, but it should align somewhere. And that doesn't. I
yeah.
thought, what is going on there? I don't understand it. And it's a little bit different because so they are assets and liabilities and all this stuff. So it's a little bit more complex. But I just thought, no, if you don't understand something sometimes, just don't get involved. So yeah, but like I said, they are down a bit. They have a little rally though from that profit warning that came off. They've already
Yeah.
tanked. So yeah, what else
Lot
is oh by
seems
the
to have a
way,
lot of debt.
go on, say again.
I
Yeah,
said they
no,
seem to have a lot of debt. Which,
yeah. Well, let's look at this just quickly. I want to look at this sort of top line figure before we get into more companies. This is quite interesting because I said, will wage data, tomorrow's CPI, inflation data, what's forecast? Forecast is 3.8% for the year, 3.9 was previous. But this will be encouraging for the Bank of England, I think, because they're saying now the worry was inflation. It'll become baked in if wage inflation kept going up because people just spend more, of course. But it's the slowest pace in almost a year, under signs of gradual cooling of the inflationary pressure in the labour market. Slowed for the third release in a row. That's a trend now, isn't it? When you think about it, we come 3 in a row. And the weakest increase in regular earnings since the 3 months to January. It's quite interesting here. Look at this. And also vacancies. ONS really showed vacancies fell for the 18th time in a row in the 3 months of December, dropping by about 49,000 for the quarter, which is quite an incident, not good, but it's good as far as inflation is concerned, because, of course, less people hiring, there's obviously less demand coming in for goods and services. So,
it gives the bank a bit of scope for rate cuts potentially.
Yeah,
but I think the pound is down today as a result of this.
Yes. Well, look at bonds. Exactly. Oh, in fact, it's just changed. All the British bond yields were down at the moment, but I don't know whether they just ticked back up. But nevertheless, they are. Like I said, if you look at the 2-year, that was the recent low at 4% pretty much, and it did rally a bit, but it's coming back down to that, rolling over a bit. Americans going the other way a little bit. They're sort of going up, and so
just to go back to the wage thing. There's some good analysis of this data, the wage data, from Kathleen Brooks, who's an analyst at xtb.com. We're now publishing that through the site every day. So have a look at that. More good analysis on the site.
Yeah. So is that on here? Where's that? In fact, we scroll down. So the most read is Ramsdens from yesterday's. I quite that got me. Canadian Overseas Petroleum, because a nightmare that's been. VARS is up on completion of transaction regarding things that. Did you look at THG?
No.
I know. I do think. I mean, there's a lot of people into that. Fourth quarter trading of the period. Q4 fully trading in line with guidance. Group return to continuing revenue growth 1.1%.
Which is below inflation.
Yeah, but is that growth really?
No.
New expanded ingenuity partnerships. I mean, if you scroll down here, there's a lot of minus figures. I mean, that they've only sort that table out there format. It's just too many figures in it, bunched up, spread it out a bit.
It's a strange company, and it's what I just can't get my head around. Some of this is product. So THG Beauty it sells products. Nutrition sells products. Ingenuity is a platform business.
Yeah.
Which sells. It's sort of like a Shopify type platform. So I struggle to get my head around exactly what this business is trying to be, and therefore I would avoid it.
Yeah. Well, I mean, if you look at this, I'm trying to find out which is the most relevant columns and rows here, but I suppose it's year on year, and you see here, down 8.7%, 8.4% there. So it doesn't seem like there's growth there. So I'm a bit confused there. Active order values that they seem to have or 4-year change. So they're almost 4-year change. From a 4-year change, they've gone up, but year on year, as you see, total revenue's gone down, continuing revenue's gone down. Average order value's gone up, but that's inflation, of course. Average order value, total orders gone down 4%, and active customers gone down 7.6%. So, yeah, it's going to look good on a 4-year chart. They started obviously based on maybe acquiring companies, but year on year, that's still going down, isn't it?
Well, the vast bulk of their beauty business was acquired. Beauty.
Yeah.
Which is a great business. But as I say, the overall group is
bit of a mess.
It's a mess. To try and get your head around it as an investor, I think is very, very hard.
Yeah. Eqteq announced a bit of a financing round has happened as drawdown of bank approved by the Italian MDC. I don't really know much about that. I know they rallied strongly a few years back.
But these waste to power.
So they've got this please. The Banco del Fiuciano, historic private bank group based in Rome, has approved the company's drawdown of a loan facility of 2.9 million announced for the company on the 4th of September. So they approved that. So that's rallying. Where is that on the charts? I know a while back, a few people made money on that. I think a few people held on to them, thinking they'd continue, but it didn't. Yeah, so look at that rally there back in 2020. It went from literally 40 pence up to 8 bagger, 7 bagger. and since then, down to 3.4 pence. So, yeah, people still holding on to the hype there. But that even like a 20% rally now doesn't even register compared to.
That's what I was saying the other day. Though. Sometimes these large moves are blips in long-term charts.
Yeah, yeah. Harbour Energy up 6.5% today. I don't know anything about Harbour Energy. Do you, John?
No.
No. What is Harbour Energy, Greg? John, you must have been joined CRN trading update today, not on Vox website, unfortunately. Oh, that was Cairn Homes.
Cairn Homes.
Have they come up with a trading update? I know Crest Nicholson came out with a profit warning.
They did
yesterday.
No, Cairn Homes. I mean, we spoke about house builders the other day. Cairn Homes was the one that I pointed out that we'd spoken about. I'd spoken about it, Paul, some time ago. Cairn Homes is focused on Ireland, and it's so we had two trading updates from the house building sector today. We had an update from Taylor Wimpey, which has seen quite a sharp drop off in completions, whereas Cairn Homes we had quite a sharp increase. And they also report having a record sales pipeline. It's worth about 900 million euros, 2,500 homes. It's unlike house building in the UK. This is now supported by government shared equity schemes. Really, get more people, to get more first-time buyers involved in this market, because there is a really catastrophic shortage of affordable housing in Ireland. And Cairn is it's in the sweet spot to help deliver that. It's also spoke about, if you look at the end of the statement, it spoke about demand for affordable rental homes. And I have seen pictures of queues in Dublin of people like trying to get themselves a rental property. It's sort of the kind of allusion to moving into the rental market, I think is quite interesting for this company as well. Could be more to go here. I think this is the nice play in the house building sector for me, albeit it's in the Irish house building sector.
Yeah, look at that cracking chart as well. You can see there the low pretty much, the second low this year or in the last 2 years was down here. Then it had a higher low, and then it broke the 200-day moving average. Always seems to come back. You have a brick neck comes out. And then you can see that previous high here. It broke that, and since it's tested a little bit, but it's nice to go up and broke several levels again. 4 times tested this level at £1 odd. Broke up again. So 120. So it's looking nice there. Anna says here. Where is it? Card Factory is the only one on the high street. Surely a moat. I don't know if that is it a moat because there's online. I mean, so I suppose if you get walk-in trade, but there's plenty of competition at the online, isn't there? And is there a reason why they're only
I mean, I've never bought a card off of Moonpig or whatever.
I have all the time because
Funky Pigeon.
No, Moonpig I do because essentially it looks like you put in a bit of time and thought, and doesn't it takes a minute.
No, you don't. You haven't. You've put it all your mate's birthday, all your family's birthdays into a calendar, and it does it for you. I think everyone knows this, but but like if you're as organised as I am, you end up realising it's you've left it far too late to buy someone a card, and you have to stack into a shop. So actually, having shops in that industry is a good thing. All I would say is, I mean, how much of a moat is it in an industry where you have W.H. Smiths? You have supermarkets with lots of cars. You have lots of little independents.
Exactly.
Cars as well. It's not exactly.
I suppose they are the only ones that specialise in. Yeah, the only ones specialise in that. But like you say, there are lots of shops that do overlap with their business model, isn't there? Like supermarkets, all that stuff. Yeah,
exactly. I've not bought anything in a car factory. What I have noticed about car factory shops is that more frequently than now they tend to appear on trading estates, bigger shops. The bigger format. Shops. This is a feature, I think, of the retail sector as a whole. It's one that Shoe Zone that we spoke about. Is that and I realised I did a bit of an injustice, a disservice the other day when I spoke about their cash outflow, because what they are doing is investing in their estate and moving from sort of smaller high street locations into big box formats, and those big box formats are more profitable, and they're where people go to shop these days. High streets are unfortunately dying.
Yeah. Informer said, "Why are you wasting your time looking at trading updates? Just give up like I have." And that's the thing. I always say to my kids,
talk about if I didn't look at the trading updates.
Exactly. And I always say to my kids, listen, quitters don't win, winners don't quit. We are in a horrible market, Informer. I understand. I've almost checked out several times in the last couple of years thinking, what's the point of this? But sooner or later it will come good. And you can guarantee pretty much it'll come good, but the month after you give up. So be careful about giving up there.
Well, it's true. It's true. Here's the thing. I used to be an analyst. Used to work in a stockbroker, and I left that industry, not entirely by choice. It has to be said, in redundancy called. And as I left in the beginning of 2003, that was the bottom of the market.
Yeah.
So, yeah.
It's almost like when despondency really sets in, it's almost like you are literally weeks or months away from the bottom of the market. And having said that, despondency has set in with me several times in the last 2 years, to the point where I'm banging my head against the wall, thinking, "What the hell is going on with this market? It's the worst market I've ever been in, ever." I've been in .com and the Great Financial Crash, but they didn't seem to last as long, and I wasn't as fully invested as I am now. I didn't spend as much time on it, so maybe I had other jobs that are going on that took my mind off it.
This has been a brutal bear market.
I saw this company on. You said it says Mike said thought IQGeo looked great yesterday, going cash flow positive and profitable, highly rated and rapid growth, so risky. But I thought some doesn't look out of hand for me. Yeah, I did look at this, and oddly, I don't know why I saw it because it was one of the most followed, and it didn't have a price next to it. What's the ticker there? Is it I? Oh, I don't know what is it. IQ something, IGQ, IG. Someone give me the ticker for that because I can't think what it was. But yeah, I did sort of read a quick read of what they did. IQGeo. Let me just search that for a second.
Yeah, please do. Because I know Jamie Constable, who's morning from Singer, whose morning note I get, or evening note, in fact, had a look at this. He likes the company, worried about a little bit worried about value, not cheap, but
yeah, it was
big updates, 12% upgrades today of lots of cash, 11 million in net cash, which is 24% ahead of forecast. 2 contract wins this year. Still no idea what they do.
Yeah, so here it is. A leading developer of geospatial productivity and collaboration software for telecoms and utility networks is pleased to now, I did see I did look at that. That's why I looked at it, because I looked at the figures. I thought, is that half year? And it wasn't half year, it was full year. I thought they're not cheap. So maybe the growth is obviously the reason why it's so highly valued. 66% growth, 56% organic, which is quite decent for a company of that size. I mean, you normally see that kind of growth on a smaller company. So net retention for the period, 132% on a constant currency basis. Record order intake. Yeah, so it's one of those things that obviously worth looking at, because at the moment, to me, I don't know what the chart is looking like. IQG.
This is the I do know this company because we've written about it before.
Right.
And this is saying this. A lot of companies out there, and I forget what we.
Wow, look at that! That's a heck of a trend.
Yeah, do you know what? It's quite interesting, because what they're doing basically is they essentially help large companies that have sort of physical infrastructure, pipes, fiber networks, that kind of thing. Really know where their assets are.
Yeah.
Which is important, because digging up the streets when you have to do some work is very, very disruptive. And essentially what they are is helping utilities, telcos, that kind of thing, minimize the disruption they cause from this kind of stuff, and manage their networks of infrastructure much more efficiently.
Yeah. I wouldn't be interested in that now. Going back to Friday, I wouldn't be interested in that. I've missed on that. There was huge upside there, but I missed on most of that.
We're not going to have this argument again.
But I'm saying, in fact, when we talk about the 200-day moving average, you can also look at it the other way, right? When the gap above the 200-day moving average is quite large, be careful. It's due a pullback, because look at it. There's plenty of time to hit that 200-day moving average, come back and rally again, come back and rally again. So why not wait for that to happen? Because it will happen. Shares don't go straight up. If you like the company so much, just wait a bit. Have a bit of patience, because there it could be a double top.
Right.
It's really maybe topping out a little bit. It needs a bit. I mean, let's be honest. When you see a company rallying at that much gap between the 200, it needs a breather. It needs to consolidate a bit. Because be careful. So yeah, growth is good, but I've not looked at the valuations on that. Do you have any stats for valuations, John, on that?
On this company, let's have a look what we got. I mean, it's not cheap. It's not cheap, but then it's only just sort of shifting into that ramp up mode. So let's financials forecast to see what we got.
Adjusted EBITDA 6.4 million. There we are. So it's 20 times, pretty much 20 more than 20 times EBITDA.
Yeah, 72 times earnings for 23, 30,
Right.
38 times earnings for 24. So yeah, I mean, there's a lot of expectation built into this, but as Jamie points out, the expectation is that this is a massive, massive opportunity globally, and IQGeo has the opportunity to be a global leader in this space. You know, network infrastructure is always being built. In whatever industry, we know, for example, in the UK, there is an enormous amount of electricity transmission infrastructure that needs to be built, and that's the same everywhere. So yeah, I guess the hope that in this price is that that this goes global, and it goes from being far bigger than a 200 million company, which is why as I say, let's not have that discussion again.
No. What I would say, right, if you see companies, you're suffering FOMO because it's rallying like hell and you can't get in, I would do what, in fact, Riffisoft just said. You put a little bit in, a small, tiny amount,
but dabble,
and then almost you'd be surprised how much it takes the fear of missing out off you. And then if it goes up more, you can put a little bit more in. But I mean, generally, when you have something that's got a breakneck growth, it will have a pullback. It will have a pullback.
I mean, I look at that share price and what has it done? It's tripled, but you know what the real holy grail of investors is the sort of 10 back. You want a 10 back. So you know, if this has the potential that is hoped, then there is a long way for it to go. Long way for it to go.
But even 10 back has come back a lot, you know. Because it's just the time period.
We're not having this discussion again.
The time period. But I mean, I think we're going for a different amount of returns. I do focus on high risk stocks, so I want bigger returns. So I'm not.
I'm saying you can't. We're going down the same path.
They'll become bigger in future. But I mean, look at it, even from this level, it's pretty much doubled this year. So and it's not this year, but look at it. From 2024, it's gone from 210 to 330. So
you might get,
it's almost like you can't be driving at 200 miles an hour non-stop. You got to pull over. Even the Le Mans drivers can't do that.
Data is such an important part of the modern world. Data is the new oil. I've heard said before. Look, for an example of a company that is big in data and just keeps growing is Relx. Now it's a very large company. It's arguably the only real tech company listed on the FTSE 100, and some people might argue that Ocado is, and I would disagree. But look at the chart on Relx. Go back 10 years. So it's just where if it's in the right sweet spot, and data is one of those sweet spots, then there is the scope to just keep growing. Growing and growing and growing, especially if the opportunity is a global one. We have to go back a lot.
But if you have fear of missing out, even that, I mean, if you look at the times, it's gone way above that 200-day moving average. It's come back.
So those shares doubled between 2015, or trebled, should I say, between 2015 and 2017, and have doubled again since then. So pick your business model and they'll keep growing.
In fact, top my company's done quite well. I've come back on news today. Is McBride? They released a trading update, didn't they? So where's the guy? There we are. Look, so that's what happens, isn't it? You tend to get that when you have a good run up, even with good results. They've come back a little bit today with MCB.
McBride. I mean, again, this is one where it was a huge. It's been a sort of perennial overachiever, then underachiever. Then it's very cyclical. As I said, its input costs have been a problem in the past, being largely derived from oil. So the oil price matters. It was a recovery play. Many changes of management in this business.
So supply. What do they supply with? Own brand stuff. Own branded,
cleaning products, personal hygiene products. So it was a recovery play. And this is an example where I think where a sort of Chinese whisper has gone around, and private investors start to get interested in it, and that becomes a self-fulfilling prophecy, and the price goes up. But
look at this. I know it's nuts, and this. I mean, obviously, I've said a lot of times. One of the most important things about companies growth, pretty much. If you want to shape and rise value, if you get a good value and good growth, and they also go health efficiency. And I say health doesn't necessarily propel a share price upwards, but it can hold it down if the health is very bad. But look at this here. There's net debt 145 million. That's the market cap. So it hasn't held them back. So you've got to pay attention to health sometimes. If it's a basket case, you can go under. But it's not the kind of thing really that propels share price. But you've got to be careful. A good company can go further if it's a healthy company.
Yeah, I just
same as market cap, then.
no, this is a low margin. It's a low margin business.
Yeah,
and its customers are, whilst it might be in the right trend of the shift to own label and sort of cheaper products, but it's at the behest.
I think we should look down our nose at low margin businesses, John. It's a low margin business.
I don't want it because low margin could be no margin quite quickly. That's if things move against it, if the market moves against it, or costs, get out of control through no fault of management, and we've seen that happening in the last couple of years.
Yeah,
then it can quickly swing to a loss.
Yeah, well, in fact, look at this, right? This is to efficient. I look at efficiency as well. There's a health efficiency all there. I put the numbers through on Ramsdens yesterday because it dropped, right? I thought, let's look at this. Look at this. It's a retailer in the right space, but I mean, look at the growth here, right? 27% top line, all growth pretty much on this. The value is very good. Health is very good. Efficiency, even gross margins. They've got the websites and stuff there, but 54%. And even return on capital employed, operating margin of 13%. That's cracking. I mean, it's not, the trend is not there yet, but that is a cracking little business there. Well, I was walking the dog and I heard the guy talking. And I mean, I've drawn to this because you talked about H&T, and I thought that's near rival, it's a bit smaller. And I thought, you've said that there are 160 shops, they're mostly up north, but they are coming down the south. And someone said, what's your target then? And he said, well, people asked me, I said, but I don't know really, but in excess of 300. And I said, and I looked at their financial statement, and they were saying there that they have shops in towns where there are 15,000 people doing well. He said, there are 350 shops in the UK where towns are bigger than 30,000 people. And he said, and all we're looking at many sites at the moment, we're just looking for the right units. And I think it's good when you got a business model like that, where it's pretty much copy and paste. You know what you're doing, each one. As long as you get the right location, you can just copy and paste it. And so I quite like that kind of area, that thing that it does well there. But anyway,
H&T has been struggling. It's struggled since I bought it. I'm not entirely sure why, because the metrics look exactly the same. But there you go.
Okay. What size is H&T then? Is that what is that like?
So it's 180 million market cap. Bigger than Ramsdens, but delivers similar. Man, it's probably slightly better metrics, but
no, they're not. I checked them out. I did the comparisons. No. Cairn McBride, Microsaic is a system there. Microsaic Systems is a company, I think, too small to be listed. They've often just trundle along. Oh, in fact, some good news out from this is a big contract actually from Coders.
Northcoders, yeah.
Northcoders, yeah. So it's worth looking at. They are a 13 million market cap company. And am I reading this right? So it's a very decent contract from the Department of Education.
It's a 10-year contract, isn't it? No, 18-month contract.
18 months for 10 million.
Yeah.
I thought, what? I don't know what their I did look at them previously. I don't know what their margins are on that. But that's a big contract for a 13 million market cap over 18 months, isn't it? So 3 million, so also underpins our 18.6% increase in revenue per student. So it's maybe worth looking at. I mean, they have struggled of late. They do train people and they do to code and all that stuff. But so they have struggled. I had them on.
Yeah, I mean, 2024 is expected to be their sort of transition year when the sort of profit starts to flow substantially. But I mean, it's interesting. It's a good contract. We know that UK public expenditure is under a bit of pressure, so even more impressive, given that backdrop. But it shows they're sort of in the right place. The government wants to upskill and upskill in specific areas. Technology being one of them. So
they want to upskill themselves, the government.
Well, they really do. But I mean, it's over the past few weeks we've had some pretty nasty updates from the sort of recruitment sector.
Yeah.
But training. I think is slightly different. They've probably been caught up in the sort of poor sentiment towards sector. Another one that's in the training industry, training and specialised recruitment is Hercules Site Services.
Sorry, let me just quickly chat. There was no news on Harbour Energy. Someone just said that it is a £2.4 billion company. So, what do they say? It was merged. Harbour Energy, a large independent oil producer in North Sea, recently announced takeover of Wintershall. Yeah, there's no news on that today, though. Just it's rising us all. Okay, go on. Sorry, go on.
No, Hercules Site Services is the other one I like in the sort of specialized recruitment and training.
Yeah.
It's for the construction industry in the case of Hercules.
Yeah, because we've had some news up from, I think it was recently
Yesterday.
on Page.
Page, all of the big recruitment firms are having a horrible time, but the specialists are doing all right. These numbers were good yesterday.
Yeah. Oh, wow. 71%. Gross profit increase 61. Okay. Adjusted EBITDA 4.1. What's this? The year 4.1. What are they then? Market cap of wow.
15.
Is that what they are? That's quite decent. Have they got any debt or what? Because that looks quite good, doesn't it?
Won't be a lot. There you go. Cash at the year end.
4.2. Don't mention any debt.
They do a couple of things. They specialize recruitment for the construction industry. One of the problems that we've had in labour within construction in the UK is a shortage of skilled labour. So one of the things that they're doing to address this is opening up their training academies, which is great. So it will sort of give them a sort of ready-made supply of staff to place, and then it does some sort of plant hires. These things, suction excavators.
Oh, I had this my watch list. I think I was looking at this sub 20 million on Vox.
Suction excavator is an amazing thing. Actually, ties into the IQGeo thing we were talking about earlier. You know, when you're digging a hole in the road, sometimes there's a lot of pipes and wires down there. A very delicate operation, and you know, traditional digging is very difficult. It's very, very risky when you've got sort of critical pipe work down there. So these suction excavators essentially suck the ground out from around these pipes without damaging them. Amazing stuff. Yeah,
that's good. Okay.
Good company.
Yeah, they're getting a bit of profit there. Okay, marvelous. I just saw an alert on Motor Group crash. Someone asked me if I ever put alerts on moving averages. Yes, there we are. So Motor. In fact, I was listening to Wick at the Money this morning, and they were saying that I'm not aware of this, but insurance, car insurance, has gone up quite a bit. And so if you are now looking to buy a car, you know, and you're having a finance and insurance, you know, and car prices go up a little bit, I think. It's not going to be easy, is it? But I mean, I think once something like that, Motorpoint, once the downturn ends and inflation comes down and interest rates come down, they're very one to look at. You know, once cars become more affordable again and finance become more affordable, it's one of those ones, you know, highly tuned to interest rates. You know, I think maybe worth a look at. But it's had a bit of a rally.
Oh, do you know what? I was in two minds about whether to put this one on my watch list because, you know, that's a savage sell-off. But then you look at some other companies in the sector like Vertu Motors, for example, the share price looks a lot healthier than that.
Yeah, I mean, a different model. I said.
Of course, it's a different model. This is the auction side of things.
Yeah, I mean,
more
franchise. He's got franchises he's out. So, but in fact, Cinch I think Cinch are sort of supporting this because Cinch, I think, up there holding again today. I think Cinch, you know, they advertise a lot. They're now at 9% on Vertu. I did see this today. I think was it today? My head's going. Ryland owns Cinch, doesn't he? Of course. There we are. Yeah, Cinch up to 9%. So they are up in their hill. But I mean, you know, there are several companies, you know, very sensitive to interest rates. And like I said, buying and selling cars, Motorpoint, they are. And I think if that takes a downtrend, they'll rally in anticipation of a more buoyant market looking ahead. Anything else? Anything else worth looking at? Johnny Boy,
I mean, what a day of news! It's so much of it. Spirant had a little, you know, had a horrible profit warning the other day, slightly better than expected. Better than expected. Hitting revised guidance, moving out some of the telco stuff. Shares are up quite a lot. Who else is there? I mean, so much today. Decent updates from DP Poland, Access Intelligence. Journeo's up, which the only news I've seen from them recently was that Downing strategic microcap has actually reduced it. I thought they cut a little bit.
Oh, did they? Oh, yeah. No, you're right. They did. Yes.
Interesting. Eagle Eye business that did make it onto my watch list.
Okay, yeah, I did look at those. Downing's gone at 4.58 from 5.89. Eagle Eye. So what do they do again?
Eagle Eye do sort of it's promotional
real-time connection.
It's promotional activity for supermarkets. So they've got Morrison's as a big client. There's loyalty platforms, that kind of stuff.
Digital offers and rewards. Okay. I think I had these years ago on the podcast. Years ago. Yeah. Company current customer base comprised of UK grocery, John Lewis, Asda, Sainsbury's, Greggs. Okay. So what the market cap? 162 million market cap. H1 trading update. So decent. Their group revenue up 20%, 24 point. Adjusted EBITDA
up faster as you'd expect for a software business. Cash on the up, which is always a healthy sign. The shares are down. The shares are down.
So the margin is good. The EBITDA margin 24%. So
nice company.
Decent. What's
not cheap. Not cheap.
Aye. Are they not cheap? Are they? Okay.
No, but good.
Okay. Wow, they had a massive rise back in from April 2022. But the bull market, they've come off. They are sort of consolidating a bit. So we are. Cool. Well, what else was there? Oh, bear with me a second. There's just a bit of financial news to finish off. Just scroll down. Where is it? Oh yeah.
Well, actually, before you do that, there was a company that the IPO market has been moribund for quite some time.
Yeah.
And I meant to mention it at the end of last week, but didn't because I forgot. But London Tunnels. So we had our first IPO announcement.
It's very interesting. It's basically, I didn't realize it was all these secretive tunnels used
I love these
in
sort of
World
things.
War. London Tunnels. Let me just get it there. Using the World War by spies and all this stuff, and they're now going to be turned into tourist areas, and so unlocking a hidden legacy here. So these tunnels, and like you scroll down, and
I'm a sucker for this sort of museum.
They can do everything for them. They can turn them into pool areas or war spies, bars.
Well, I think that's. I guess that's what it was like. So no, I loved it. I love these sort of things. One of my favourite museums is Duxford.
Hidden tunnels.
Royal Museum, Duxford, old planes. But there's a place in Essex called the Kelvedon Hatch. I don't know if it's open anymore. The Kelvedon Hatch top secret nuclear bunker.
Yeah.
And it's basically one of the sort of regional bunkers that was built during the Cold War for local government. And you could go down in it, and I think I've been there about 3 or 4 times. So I will be there. For sure.
The tunnels will use history hidden beneath our feet to deliver new experiences that transpire exploration and imagination. Imagine being able to walk into tunnels built by the British in the 1940s, and so they're designed to protect people from the Blitz. They're changing into sort of these areas around the world. This kind of
I think it sounds amazing. Don't know what the numbers look like, so need to have a bit of a dig around. As closer to the market.
First and foremost, you got to think it can't be cheap. Doing this. So, but I mean, what kind of numbers they're going to get? Visit numbers, but interesting, very interesting. It's a bit of history and reimagining history, isn't it? Because you've got that history background there, which gives it some gravitas, and then you can obviously just. I imagine it'd be quite popular, for like drinks and.
I think it'd be popular. I think it'd be popular.
Yeah. Okay.
220. Oh, here we go. 220 million. It's going to cost to build.
Okay. I don't know if you noticed this. This is quite a pinch point. Yesterday, UK's largest nightclub owner calling administrators. There are about 35 clubs across the UK, and they're saying cost of living is hitting students now, and they're drinking less anyway. But of a smaller pie, they're spending less, and so they've called in 35, which is you are getting these sort of red flags in society and stuff like that. But maybe you do have social competitive socializing bars which seem very busy, and I think rather than just sit there and drink and dance, maybe people do want to go and play games against their friends or students or whatever, because I don't think see them complaining. But
it's a horrible sector. There was I can't remember the name of it, but there used to be a listed nightclub group which suffered the same fate.
Yeah, these probably took them over because they went bankrupt about 2020, I think. And then Recom, which is from Finland, some of that, bought them, and so the Recom now owns Eqteq and Prism brands across the UK, 35, and now they've got into trouble. So they were in trouble a few years back.
Again, I guess the closest thing you've got on the market to it now is Revolution Bars, not technically a nightclub, but nightclub-ish. And their numbers the other day were horrible. It's a really difficult sector. I would not ever touch it.
Yeah, I didn't. So it's Mohammed Al Arian talking about the inflation because of Suez Canal. 12 to 15% of global trade goes through there. But also, this is now fuel retailers forced to share price changes within 30 minutes under pump watch plan. I don't understand what this means. On what? On the website or what? Department
No,
of Energy.
change them at the pump.
Well, so if they put them up or down, they're not put them on the pump, so they're not changing them, are they?
It sounds to me like they've got 30 minutes to change the price on the pumps when the price of
So
fuel
if it goes
changes.
up, they're not changing them quick enough. Is that what they're saying? So people are coming in thinking they're getting like so and so per gallon, and they're not changing them.
It's like the fiscal drag of motoring, isn't it? And
it's a con, though. It's found that drivers were overcharged 900 million in 2020 due to supermarkets failing to pass on cuts from falling prices.
Yeah.
You know what? I hate the supermarkets. I hate them because they pretend to be consumer friendly, doing everything for the consumer. They're not. They don't care. All they want you to do is consume at their supermarket. So even now, there was a couple of supermarkets that are reducing. Yeah, it is, but they try and con us into believing they're our friends. They do it all for us.
That's called marketing.
Exactly. No, it's not marketing. It's lying. It's lying.
That's called marketing.
No, exactly. Lying. But you've got to be honest. I really hate it. As I think two supermarkets have reduced baby milk, Aptamil now because it's gone up a lot. They're not doing it. They've got headlines from this. You're right. It's marketing. They don't care about, we're doing it for the babies. No, they're doing it for you to consume at their store. That's it. They want your money in their pocket. That's it. They're not out for... But the fact they tend to be on the side of the consumer and care about the consumer. Yeah. They only care as long as you're spending in their store. That's all they care about.
As a shareholder, you should be very happy with that. Anyway, I would like to know how much taxpayers have been overcharged by government not passing on the effects of inflation quickly enough.
Yeah.
Tax watch.
I just hate the duplicitous nature of supermarkets pretending they have our best interests and needs at heart. They haven't. They've got their bank balance of shareholders at heart. That's what they got.
Yeah. Well, at least I'd like to know whose interests the government have got at heart. That's another.
I don't know what the heck they're doing. They have no idea what they're doing. But who knows? Thank you everyone for watching. Don't forget, big day tomorrow. CPI tomorrow. CPI will be at 7:00 in the morning. So are you coming on tomorrow, John?
I wasn't planning to.
Oh, okay. Well, we can
chat with CPI. Maybe.
Okay. Okay, but don't say yes and don't do it because I'm leaving the village.
No, I'm going into London tomorrow.
Oh, okay. He's going to see the tunnels.
No.
I want to see the London tunnels, how they're getting on. Yeah. Everyone, thanks very much. Hit that thumbs up if you could, and share, like, subscribe to the channel is important, and download the Vox Markets app, voxmarkets.co.uk/app. Justin, can you share your TradingView screener setup? I've got loads of I've literally got too many screeners on TradingView. I set them up every day, and I've done it before. I delete them, but I do loads of screeners on there. Yeah, but I find it quite handy screeners. As does John. In fact, name a screener for Friday if you want, and on the chat there, and we'll come back to anything you want. But thanks very much. See you. Speak soon. Bye.
Bye.